All right, ladies and gentlemen, it's good to be with you. It looks like this mic wasn't made for me. I'll have to bend over a little bit, bend a knee, you know. Not that there's a problem with being short. It's all good, you know, so. All right, so the last panel I'd like to introduce, and then they'll talk about the topic a little bit, and I'll invite them to share some remarks, and then we'll do a little Q&A. So we've got two panelists today. Ray Dillon, he's the former CEO of Deltic Timber Corporation and the GIC board member. This is Mr. Ray Dillon. And then Mark Stidham there on the end, he's the co-founder and CEO of LuLaRoe. And I'd like to excuse Wally Hawley. He is the co-founder of InterWest Partners, but he's out of town. Well, he actually had to catch a flight to get back on time. So the topic today for today's panel is about corporate challenges for today's CEOs, and we're going to have a very practical discussion regarding this. And these gentlemen are prepared. I've got a few questions for them, and then we'll open it up to you for questions that you may have. To start this, I'd like to just share, and this is a bad example of being a good leader, I guess, a story. I'm going to read it here. It's been clipped out of an English newspaper years ago, and it's only a few sentences here, so I'll read it. Interesting story. It says this, it appears that an English company owned a property in the West Indies. A violent storm damaged one of the buildings, and a man was sent to make repairs. Of his experience, he wrote the manager as follows. Now, as the manager of the business, I'm sure he loved getting this from his employee. Respected sir, when I got to the building, I found that the hurricane had knocked some bricks off the top. So I rigged up a beam with a pulley at the top of the building and hoisted up a couple barrels full of bricks. When I had fixed the building, there were a lot of bricks left over. I hoisted the barrel back up again and secured the line at the bottom, and then went up and filled the barrel with extra bricks. Then I went to the bottom and cast off the line. Mistake number one. Unfortunately, the barrel of bricks was heavier than I was. And before I knew it, what was happening, the barrel started down, jerking me off the ground, and I decided to hang on, and halfway up I met the barrel of bricks coming down, and received a severe blow on the shoulder. I then continued to the top, banging my head against the beam, and getting my finger jammed in the pulley. When the barrel hit the ground, it burst its bottom, allowing all the bricks to spill out. I was now heavier than the barrel, and so started down again at high speed. It started down at high speed. Oh no, I apologize. I was now heavier than the barrel and so started down again at high speed. Halfway down, I met the barrel coming up and received severe injuries to my shins. When I hit the ground, I landed on the bricks, getting severely painful cuts from the sharp edges. At this point, I must have lost my presence of mind because I let go of the line. Bad idea, right? The barrel then came down, giving me another heavy blow on the head and putting me in the hospital. Closing sentence, I respectfully request sick leave. You know, so that's a nice little story about a bad example of, he just made a few bad choices. As you can all appreciate in business, we need to learn from the past, and we need not to be short-sighted and look to the future. And business leaders like these gentlemen have done such that, and we're gonna learn from them today. So I'm gonna invite Ray Dillon to share his thoughts on the corporate challenges of today's CEO, and then we'll hear from Mark Stidham. Ray.
Thank you. Thank you, Bradley. And the thoughts I have today are my opinion only. I'm sure there may be some dissent in the audience, but that's what I'm here for. But for the purpose of this discussion, I've tried to segregate my comments toward public company CEOs and what I've learned about the challenges for private company CEOs. From a public company standpoint, regulations and compliance with those regulations, and specifically the SEC, Sarbanes-Oxley, is a continual challenge. Compliance, making sure you're in compliance, because as a CEO, if you're not, it's all your fault. The CEO liability today is greater than it has been, and the CEO's reputation is constantly at risk. For better or for worse, there's this thing called activism in the shareholder quadrant today. And from a public company CEO standpoint, it can be quite a distraction. Some activism can be positive, some can be not so positive, especially when you look at a broad group of stakeholders instead of just shareholders. From a CEO standpoint, activism is a distraction in many, many ways. It takes away management time, and It causes management to focus on short-term results rather than the long term, and in some cases, the success of the enterprise. It elevates the risk of being wrong to the point that CEOs don't take risks today or don't make those capital investments necessary to future the success of the entity or the facility. CEO public board relationships today, I think, are more strained than I've seen. CEO turnover today in public companies is higher than it's been in the last 10 years. The risk-reward relationship for the public company CEO today, in my opinion, is diverging. Today's public company CEO I characterize as today's football coach. Shareholders, in some cases, are fair weather fans, and you either win or you go home or you get a bad say-on-pay vote for those of you that are shareholders and get to make those votes every year. So, from a private company CEO standpoint, the ones that I've had the benefit to work with, and it's mostly been through an M&A process, you know, I think private company CEOs deal with structure as one of their biggest challenges, discipline inside an organization, controls. The good private companies have those, and many private companies don't. Financial reporting, at least the ones that I've had the benefit of looking inside, can be suspect. Suspect from the standpoint that they don't meet peekaboo quality standards to be included in an SEC registration filing in the case of a merger and acquisition. Not that all public companies are looking for merging into a public company or becoming a public company. A lot of private company audits that I've looked at, quite frankly, are lacking from the standpoint of merger M&A quality or peekaboo standards. Personally, I've told many private company CEOs that the best thing they could do is have outstanding audits, outstanding financials, and I think that improves and increases the value of the enterprise. And then the best one is tax returns. A lot of private companies, I come from the forest products industry, the pulp and paper industry, a lot of private companies are dealing with massive amounts of land and timber, got capital gains associated with it. So if it's an M&A process and a public company's taking it off, I own those tax returns for 7 years. Well, the value that you're paying, you're probably not, you know, there are no deals anymore. Everything's at market or more. So the risk associated with those tax returns on whether there's an audit after a merger. Other private company challenges that I see is exponential growth and resources to manage that growth efficiently. And then there's strategy. Are we in it for the long run, or what's the exit strategy? And a lot of private companies that I've worked with, there's always the family employee conundrum, whether they're good or bad, and what to do. So, trying to sum all of that up into something that's reasonably coherent. Strategy for both the public and private company CEO, long-term versus short-term, and how you get there is one of today's biggest challenges in an uncertain world, as we've heard the last 2 days. The risk-reward associated with the investment. From a CEO's perspective, the investment of time, reputation, and potential success. We've heard about employee development. We've heard about employee skills and the challenges associated with both of those. I'd like to bring up employee commitment, employee loyalty. And I recently read an article where the focus toward the shareholder has taken the benefits away from the stakeholders in an enterprise. And so therefore we have less loyalty and commitment than maybe what we have had in the past. Employee turnover is always a cost, and as we've seen yesterday, it's on the rise again as people are chasing higher wages. So those are my thoughts about challenges for today's CEO, both on the public side and the private side. I hope some of them are meaningful, and I look forward to your questions.
I'm Mark Stidham. I'm the CEO of LLR Inc., which is a holding company for a clothing brand called LuLaRoe. I'm not quite sure why I'm up here with Ray, who's got many, many years and a broad education. I'm a fairly new CEO. This is a family-owned company that we started in 2013. And I am the CEO by default because it had to be me or my wife. And so spent some time as we built this business. I've learned a lot. And if I say anything clever at all today, I'm going to tell you I read a lot. And I'm going to attribute it right now. I don't know who I would attribute anything clever to, but I read a lot of books, and I get most of the things that I know came from great authors and from mentors and people around me. And so one of the things that we have focused on as we built the business, this concept of employees, and as you grow in a rapidly growing environment, how do you bring in the right people? How do you find the people that are going to fit not only the skill set, but your culture? And for me, that's been one of the challenges, and addressing that, we have elevated our culture to a level above skill set. I have a firm belief that I can teach a skill set. So we're looking for people who have the skill set, but the best skill set, if you don't fit the culture, if you don't understand what we're about, that skill set's not going to be utilized. We're not going to be able to leverage those talents that you have if you don't fit, if you're not a team player. You know, it was as Ray was talking, I was thinking, you know, he's kind of hitting on a lot of the things that I was thinking about. As a private enterprise, we have a lot of latitude in how we run our business. Let me just ask, how many CEOs or executives do we have in here? Okay, so there's a good spread. I wanted to make sure that I'm actually talking to people that aren't theoretical and that might actually have, you know, some interest in what I'm saying here. But, you know, Cody asked me yesterday, he said, so what have you learned so far? And I said, I've learned that I run a really simple business, okay? It's not, the theory and the tracking of all of the trends and all of those things is something that I find really interesting, but I leave it to these experts that do it. And so for me, one of the challenges in business is staying focused on who you are and what you do, and not letting the trends and the things that come from outside really have that big of an impact. So for me, a question, for example, if I'm going to invest in capital expenditures, I don't care what the economy is going to do because nobody really knows. What I care about is, do I need it in order to grow my business? Is there demand that requires that I make that capital expenditure? And number two, can I afford it? And if the answer to those two is yes, then I'm going to go ahead and move forward with that, regardless of whether we're headed into a recession or into a boom, what else is happening outside. For me, I have a little mantra that is this. Just remember, the main thing is that the main thing is the main thing. And if you'll just stay focused on that, don't let the things that are happening outside really rattle you off of what you're trying to accomplish in your business. And in order to do that, you need to know what the main thing is. And so once you've identified that, you then need to communicate that clearly with your team so that you're all pulling in the traces to the same goal. One of our challenges is obviously trust in an executive team. We run a very small, very tight executive team. Also, as Ray mentioned, we're a small family business. I have multiple family members that work inside of the business. And there's a challenge there in how do you balance family and business. And the reality is I've faced that challenge a few times and found that the best way for me to face that was to go to the family members and explain to them that what I needed as their father and what I needed as their CEO was the same thing. I needed them to show up in the best way that they could. And that if they weren't doing that, that they needed some time off to figure out how they were going to show up. And using that has enabled us to really bring the family closer together as we're growing the business. The business has had incredible growth challenges, and through that, again, I think one of the keys to your success as a small business, it's in growth, is having the right team. Collins talks about in his book Good to Great that get the right people on the bus and then find the seat for them. And Lencioni talks about hiring hungry, humble, and smart. And so that's what we try to do. And we've been very fortunate in hiring people that were connected somehow to what we were doing already. They were either a friend or a relative or a coworker of a quality individual that we brought in. And so we've been very fortunate in building a team, a small team that's very, very efficient. But one of the challenges there is getting that team always to work on the same page. And so you look at the speed of trust and trying to get that cohesiveness in that team so that everybody knows that we're working together for a common goal. And so one of my challenges right now is building that trust both in our executive team, down through our employees, and then out into our distribution network, and finally to our retail customers, letting them know who we are and that what we say we intend to do, and that we're all playing from the same page. And so one of the challenges there is communication, getting the team to put egos aside and be willing to have the hard conversations. And so we spend more time in our training, training our personalities, our ability to communicate, our ability to work together, our leadership skills, our servant leadership concepts, than we do skill sets. Because I already have confidence in their skill set, and I know that if we can bring them together and I can get all of those skill sets leveraged, we can continue to move the business forward. And so that's a few of the thoughts that I have, and I think we're going to have a lot of fun with some Q&A here. And so with that, I think we'll bring Bradley back up. He has some questions for us. Thank you.
Thank you, gentlemen. I just have a couple questions to get the questions rolling, and then, of course, whatever questions you have in the audience. So this is really a question for both you, Mark and Ray. And Mark, you've touched on it. Ray, you have as well. But I'm interested in your thoughts on how to get it done. How you've kept your eye on strategy. And Mark, you mentioned it's the main thing, right? But as we can all appreciate, as we're consumed by the day-to-day activities of the business, we have to not lose our eye on strategy. And I think you briefly touched on them, but I'd like to drill down a little bit more, like from a systematic and disciplined way, how do you keep strategy in the forefront of your mind and not be run over by it or miss it?
So we have weekly executive meetings, and we start those meetings by reiterating what our strategy is. What are we trying to accomplish? And so on a weekly basis, we revisit that. We also have a set of rules for those meetings that we have all agreed to. We've all signed in that we're going to be honest, we're going to be productive, we're going to be candid, we're going to own our data, we're going to assume innocence. And so that clears the deck to have meaningful conversation. And there's a lot of projects that might be worthwhile projects, but if they're not moving us specifically towards our strategy, then we have to figure out whether they fit or don't fit, even if it's a worthwhile project.
Just a follow-up question to that, and then Ray, you can make a comment. Just curious, is your strategy a written strategy, and how far out should it reach? Like 2, 3 years, 1 year, 6 months? How does it reach out there?
So our strategy is tied to the mission statement. And our mission statement is to strengthen families and bless lives. And so when we look at any decision we're making internally, the question is, how does it fit with that? Now, in terms of the strategy that most people are probably thinking about, what are your strategic moves that you're going to make? I will tell you, we've been running 1,000 miles an hour with our hair on fire. And had I set any goals, they would have been irrelevant to what actually happened. And so I'm not a big believer in setting goals that are metrics. I'm more committed to setting behavior goals and then using the outcome as the metric to whether I've achieved that goal. So in other words, we didn't set a sales goal. We set a behavior goal, and then that sales that we achieve tells us whether we've hit that goal. Ray talked a little bit about financials and about being very transparent. Well, if you're willing to use your financials as a metric and not as your end goal, then it's real easy to be honest about them and keep them and keep them clean, because they're telling you what you're doing, and you need to know what you're doing. So in terms of strategy, our strategy is get the product to the consumer, make them happy.
Very good. Ray, what about your thoughts on strategy?
Well, my background comes, I've spent my entire career in heavy capital-intensive industries. So the strategy's pretty much been set either by bricks and mortar and concrete and rebar in the ground, or massive assets dealing with hundreds of thousands of acres of timberland. So the strategy for those type decisions have been set. And long term, you're looking for, is your product market share declining? And then what do you do with those assets? When do you sell them, or what do you convert them into? I think you need to constantly ask and question the strategy you're on to maximize that value at the appropriate time. And that's why I like coming to conferences like this, because I believe the CEO that absorbs the information we've heard here the last 2 days, applies it to their business, and is more informed than their competitors, will make better decisions and will be at the front of whatever that change curve is. So I think strategy needs to be constantly evaluated, maybe annually. That doesn't necessarily mean it needs to change, but trends and how you're adjusting to those trends is very important, whether it's a commodity product, which I've made both lumber, liner board, and pulp in my career, or whether it's in the retail side.
Okay, so don't let go of the line of the buckets in the air, huh? The barrels in the air. Remember the first story. So good. All right. Question about growth, and as things you've both ridden through some cycles on the economy. What advice would you give for people that are going to or have on how to manage that and not lose quality and service, to use those two words loosely? What types of things have you done or could tell people on how to manage growth or how to manage a recession as you've lived them?
To me, quality and service are prerequisites, such as safety, especially in an industrial environment. And when you lose respect or attention and focus on quality and service, then it's just the first step to going out of business. And so, especially in the commodities-driven industry, you're constantly looking for higher productivity and improving quality. Sometimes you can increase productivity, but quality suffers. And then you lose customers, and then you have more downtime associated with that asset base, and nobody wins when that happens. So they're synonymous with what I've called the priority, which everyone comes to work and goes home safely, and we make high quality products and get them to the customers on time, and make them at a cost where we can earn our cost of capital, and that's very hard to do in capital intensive businesses.
What are your thoughts on that, Mark?
I'm just going to echo what Ray just said, that quality and service are fundamentals, and they can't be sacrificed. And in fact, at points in time in our business, we deliberately slowed the business because we were unable to serve our customers appropriately. And so those are the underpinnings to a long-term business. And one of the other comments that Ray made as he was speaking was the idea that in a public company, you're held hostage to the quarterly reports. In a privately held business, you can take a long-term view, and you can say, okay, this is going to hurt right now. It's going to hurt for this quarter or for this month, but ultimately, we're going to serve our constituents better if we make this move.
Sure. So, Mark, particularly in your business, you've seen astronomical growth, and that's a logistical nightmare for anybody that's managing a business. Maybe tell us how you've been able to manage that without having a heart attack or dying prematurely, Well,
I didn't die. I might have had a heart attack.
Okay.
But,
haven't died yet.
Let me just share with this group what we did. We were a small family business, and we opened our bank account in May of 2013. 2013 calendar year, we did $3 million in sales. 2014, we did 9.6. 2015, we did 73. And 2016, we ended the year with just over 1.3 billion in sales. And so to say that we had a tiger by the tail is just an understatement. one of the, you know, it just seems like as we went forward, we were faced with problems, and we brought a good team together, and we just said, what are we going to do about this? And we solved them as they appeared in front of us. I wasn't smart enough to see far enough ahead to tell you what was coming, and if I had told you what was coming, you would have called me a liar anyway, because who could conceive of that kind of growth? But along with the internal executive team, we also looked for outside vendors that could support that growth. And so we had some strategic alliances with people that were already in place that could help us with that production. We expanded rapidly internally with our fulfillment centers and those things. We went from 37,000 square feet in April of 2015, kept that building and moved into another 130,000 feet in January of 16, and in August of 16 rented 630,000 square feet. All of those facilities are still operational, and recently we just closed on a distribution facility in South Carolina that's another 500,000 square feet. And so we had to move quickly on these decisions, and one of the other things that we've done is that we were very, very conscious of our capital and of our cash flow. We do not have an operating line of credit. We have grown too quickly. We didn't have audited financials, and so the financial markets have been either close to us or too expensive. And so we've had to be very, very disciplined. And what we've done is just basically pour all the assets back into the business. And so being very frugal, and then aligning with other vendors and with an executive team that was very nimble allowed us to manage that growth.
Okay. Well, let's open the floor to questions that you have, and then I'll close with a couple finish off questions. So what questions do we have? Here in the back. Go ahead.
I'd just be interested to hear the size of your executive team over time, from that start point to where you are today.
So, okay, very interesting. My kids are all entrepreneurs, and so as the business was very small in the beginning, my wife said I'd like to have our kids involved. They all had different skill sets, and so I had one that was an accountant, and I had one that was a brand manager, and another one that was in sales, and they came in early on, and they were the first executive team. As the company grew, we had a little family meeting, and I said to them, you need to understand that you'll have that position until you're no longer capable, until the business outgrows you, at which time we will be looking to bring other people in. And so in the very beginning it was a family enterprise, and then we brought in a production manager who had extensive experience, and we brought him in early, like in early 2014, and then we brought in a CFO. I was wearing the CFO hat until it got to a certain size that I just couldn't do all of that, and brought a CFO in about 1.5 years ago. I handed off the warehouses about 1.5 years ago, and at that time we expanded. So our leadership team, we also brought a CTO, a technology officer, and began to develop some of our programs internally because we couldn't find off-the-shelf technology that would really meet our needs. But the team was fairly much rounded out about 1.5 years ago, and we run with there's about 12 members in our C-level suite, and we keep it very nimble, so.
I guess my question, Mark, is for you. My wife, she hates to shop, but the other day she came home with clothes she loved. And I asked her where she got them, and she said her friend Denise. What confused me is Denise is a housewife, but apparently she just bought $10,000 of your clothes and put them in her house to sell. My question for you is, how do you get a housewife to spend $10,000 on clothes to resell?
Well, first of all, when you see Denise, tell her thank you. Okay.
I will.
And,
I will.
Again, this being an intimate audience, I will share with you. We started, the way you get them to do that is that they make money. And we're a direct sales company, but we don't fit the mold of most direct sales companies. In order to, our distributors actually buy product from us, they own it, they take title to it, and then they sell it at a profit. And they basically do a 100% markup, so they're making 50% off of the sale of the product. And that's the core of the business. And the business was designed for that housewife. My wife and I looked and said, you know, there's got to be an opportunity that would allow women to work part-time and make enough money to make it worth that time, effort, and energy. It's tragic, and that if you're not a career, if you don't have a career as a female in this country, it's very hard to get a job that pays enough to make it worth leaving the home. And so for those women who went to college and then wanted to have a family and have children, we felt like if we could provide a business model that would allow them to actually make enough money to make it worth their while, that would be attractive to them. One of the numbers that we're the most proud of is that through last month, 85% of all our distributors that ever signed up had ordered product within the last 90-day period through last month. And so again, the key to that is that we're not selling a dream or a theory, or if you hang in there long enough, you can literally start your business, open your product, have a sale, and be profitable that minute. You begin to be profitable. And so ultimately my goal is to teach people to be independent, to teach entrepreneurism. I deeply believe in that myself. I was raised by entrepreneurial parents, as was my wife, and I believe deeply in freedom, and I believe that free enterprise is the gateway to freedom in so much more of your life.
I've actually got a quick question I'm going to ask Ray as I'm sitting here thinking about this. Ray, you mentioned that there's this change in the landscape between the public CEO and the board, and I'm curious to know your thoughts on, is there things that as a CEO that you can do to mitigate that, or what are your thoughts on that, or how did you navigate that environment?
Communication, quite frankly, is the only way that I know you can navigate it, and economic conditions tend to change so much that yesterday's priorities are no longer today's priorities, and then making sure that you're educating and bringing the board along associated with what's changed and why we've had to pivot, or why operating rates are not 100% or 80%. And so therefore quarterly sales, quarterly profit numbers aren't what they were shown at the last forecast meeting. In a lot of environments today, I'll call it management team, board relationships can be very hostile or combative.
Right.
And in some aspects that's healthy, but then also in some aspects you're always looking over your shoulder. So,
wondering when the knife's going to come, you worry?
you just never know.
Yeah. All right, other questions we have here.
How are you managing the uncertainty of healthcare costs in your environments?
That's a good question for both of you.
Go ahead.
I'll go first. I'm proud at Deltic Timber we provided health care and dental care benefits for every employee from the first day they were employed. And we just considered it a cost of compensation. Okay, so when I was CEO, we were worried about our plan being characterized as the Cadillac plan and taxes associated with that, and then therefore not wanting to take anything away from the compensation equation. Now, unfortunately, there's a group of employees that never value that compensation until they use it or need it. So therefore, we would sometimes have employees that would chase cash rather than having the benefits of cash, benefits, and retirement. But we thought it was the right thing to do, and for it to be affordable. So that's what we were doing.
And what have you budgeted in next year as far as your percentage increase for healthcare costs?
Well, I'm no longer budgeting it, but Deltic was self-insured, and we spent a lot of time educating the employees on the healthcare marketplace, staying out of the emergency room when possible, and using their primary care physician, and then that allowed us to control cost and then put more into the wage side of the compensation equation and possibly the retirement side. So it was an education process, and it's just not free. I mean, if you don't educate employees, they really don't understand that that is a cost of their compensation or part of their compensation.
And For us, we just have a simple participation plan. We pay 50% of their insurance costs if they choose to participate. And I'll be real honest with you, any deeper in the weeds than that, I really don't know. I've been looking at other things, so my CFO or my HR people would probably have a more robust answer to that.
I can tell you what I've seen this last year, like all the rest of us, a 12 to 20% increase, and plan for 15 to 20 next year. You know, that's where it's at. So, all right, other questions? What other questions we have?
I was just curious how you, from a practical standpoint, implement your culture and get that to all your employees so they understand it.
That's a good question for both companies. Yeah, go ahead, Mark.
Well, I'll start. I think it starts at the top and leading by example. I'm not one of these that believes that the best CEO is the lazy CEO. There's a book out there that actually prescribes that equation. Maybe that's why I'm not a CEO today, but I think working pretty hard at and showing others and explaining the vision, strategy, and the economic principles associated with a commodity business and why their part is so important. You know, as I was CEO and would visit our plants, everyone wants to build something. And I said, building something is great. Now can we get a return on what we build? And getting them to focus on the return or economic benefits of building something was very important. But I think it starts at the top, and it starts with messaging and then getting people to understand that.
Yeah, it definitely starts at the top, and then what we do, we actually have a culture officer who it's his job to discuss. They have a program in our hiring department. And then one of the things that we like to do also is we'll bring our retailers when they come in for training or for a convention or whatever, we give them access to the warehouse, and we let the warehouse workers see what they're putting in that box, that it's not just a box of clothing, it's somebody's business, and that they take pride in that. And then the retailers, on the other hand, get to see how hard these people work to pack the boxes, and it creates a lot of unity in that environment. And one of the things that I was most excited about is my warehouse manager went without asking me, made some huge banners with our branding on it and hung them in the warehouse, and it says delivering hopes and dreams. And so the people that are working in the warehouse understand it's not just a job throwing stuff in a box, but that box means something to the recipient.
Other questions?
So I do have a pair of your leggings. They're wonderful. My question is for you. I have a young friend in Salt Lake who is going to become a distributor for you, and I'm excited to watch it. She is young, and it's opening some doors for her that she didn't have before. So since you're so widely distributed, I looked at your map on your website, how do you get all the way down to that young 25-year-old who's launching a business and make sure she's getting the right kind of training and understanding of business and ensure her success over the long term?
Okay. Yeah, we have internal training programs, but we also, sometimes we're referred to as an MLM company, and I say, okay, I'll take that, but we're multi-level management. And so not marketing. The marketing happens right down at the bottom. That's where the product gets sold to a consumer. But in the middle, as the company grew, we didn't set out to do this. We didn't have the idea before, but we needed some mid-level management. And it was obvious that the best people to fill that role would be those who had already had some success in the business. And so we have a structure of leadership that's in the retail side of the business. And we have ongoing leadership trainings. We have tours where we go out into the field. We have convention coming up in about 2 weeks, where we're going to have about 20,000 of our retailers coming into Southern California. And so we're very aware that a lot of these people, and it's not just women, there's families, there's husbands and wives working together, there's men in the business, but a lot of them, this is their first crack at entrepreneurism. And so things that are, I just had this conversation with my executive team last week, and I said, remember how Vince Lombardi started every season with his athletes? He'd bring them into the locker room, and he'd go, gentlemen, this is a football. And that's where he started with the basics, because if you don't start with the very basics, you make assumptions that they know things. And so things as simple as open a separate banking account, keep keep books. Some of those things that they're just not intuitive to them. And so, so we have both corporate initiatives to go there and training in the field. From their field leaders and the people that brought them in. And we've recognized that there's some issue with that, and we continue to realign. One of the moves that we just made, we had a sponsor program that paid when people ordered product. We finally have the technology to track actual field sales, and so all compensation now is tied to field sales. And so if your friend isn't successful, nobody's going to make any money. So the people that brought her into the business have a real vested interest in helping her and giving her that guidance.
So the last question, just to kind of round this out, and it's for both of you, and maybe the answer is the same for the question. There's really two questions. I'm going to pose them as one, but in 2 or 3 words, what advice would you give, number one, a seasoned CEO and a new CEO, So what 2 or 3 words, maybe it's the same advice for the seasoned versus the new, but maybe they're different. I'm curious to know your thoughts on that.
Well, I think I'm ill-equipped to give the seasoned CEO advice, but if I were, it would be the same advice, and that would be figure out what your core business is and focus on that. Focus on what you're doing, on the things you can control. Don't worry too much about what your competition does. If you're following your competition, you already lost. Figure out how you're going to serve your clients, how you're going to serve your customers. Focus on that, and be willing to be nimble. Don't be so tied to your strategies or to your programs if they're not working. Listen to the feedback. Listen to what your customers are really saying. I know there have been times in our business where I've been a little tone deaf, and they were telling me this isn't working, and I say yes it is, and they say no it's not, and eventually I have to stop and look, and information I was getting wasn't accurate, and so my assumptions that everything was okay weren't true. So be open to the feedback that tells you what you need to do, and be willing to let go of your dogma and do the things that you need to do, and stay focused on your business. Don't let the outside noise distract you.
Ray?
And I hate to steal the answer from one of the panelists yesterday, but it's actually the right answer. That if times are changing, you better be changing your thinking, and especially in capital-intensive businesses, and that's where most capital-intensive businesses run into problems, is that you think that what was your thoughts or your strategy is going to be your strategy tomorrow. And you don't change fast enough, you don't adapt, or you don't change the product mix.
Very good. Ladies and gentlemen, thank our panelists.
Thank you, sir.
Well, thank you very much. That concludes our conference. And if you go to interdependence.org, which is the GIC website, in the resources section, we will have all of the slides, including Paul's video. They should be up by the end of the day. They're being uploaded as we speak. And you can see more about the GIC there. So I'd just like to thank all of our partners, especially the Bronze Buffaloes and the Hero Partners, and say the point of the GIC is to foster a discussion. And in the light of that, I want to thank all of you for doing that, for being here, and for contributing with your questions and your attention. Thank you very much.